Hello, and welcome back to the Accounting Podcast, the number one podcast for accountants in the world, and your weekly news roundup. I'm Blake Oliver.
I'm David Leary.
And David, I am gearing up. It is Thanksgiving week. I cannot wait to watch the Macy's Thanksgiving Parade. One of my favorite things to do on Thanksgiving, to sit at home, relax, and watch the floats go by. And what do you know? But Macy's is in the news. Yesterday, on Monday, they announced that they have to delay their quarterly earnings due to an accounting error.
And when you say in the news, it was in my news feeds 800 plus times, and it was all over LinkedIn. Actually, when you were telling me about it yesterday, I got an email from LinkedIn saying, look what's hot on LinkedIn. And everything in that email was the Macy's. It was all about Macy's. It is unbelievably how big of a story this is for it all to have the exact same teeny paragraph of nothing.
Well, and what's interesting about this, there's lots of things that are interesting about it, but the first thing that really strikes me is that it's not that big of an error in the big scheme of things. We're talking 132 million at the low end, 154 million at the high end. And this relates to small package delivery expenses. And for a company like Macy's, which does tens of billions of dollars a year in revenue, that is not that much. But the news broke, and maybe it was just a slow news day or a slow news week, so it got a lot of attention. It got picked up in the New York Times, Wall Street Journal, CFO, all the accounting publications. You got it pushed to you via notifications. I'm sure many people saw it. My wife saw the story and brought it to me before I even saw it. I'm sitting there drinking my first sip of coffee, and she's like, "Did you hear about what happened at Macy's?" So this is like big news. And there's something very strange about it. There's some really odd things about this story that don't quite add up to me, and I'm eager to discuss them with you and share my thoughts with our listeners. And welcome to our live stream viewers, including Geraldine Dressler. Hello, Geraldine. Welcome to the show. Great to have you here live. If you haven't yet joined us live, be sure to subscribe to the Accounting Podcast on YouTube. Subscribe and hit that notification banner, and you can get notified when we go live. Join us, chat with us, let us know what you think about the stories we're discussing, or share stories that you think that we should be talking about. So, David,
Should
we
we
will get...
recap
Go
the
for it.
facts of this story first before you go
Yes.
into the mysteries of what this story is?
And that's going to be the first thing we do after.
Okay,
That'll be
sorry.
the second thing we do after we give a rundown of what else we're going to talk about this week, right?
The teasers, yes.
We're going to tease it. We want to talk about Trump's tariff plans. That is also big news, and arguably far more impactful than an accounting error. But we'll get to that second, because this is an accounting podcast. But I think there are massive implications if this plan is enacted on small businesses, and it will impact many, many, many accountants, all accountants. And we've also got that story about expense fraud that we didn't get to last week, which is really actually very relevant given what's going on at Macy's. I've got a story about firms raising prices, how many are doing it, how much they're doing it. That should be of interest to any of our firm owners or operators out there. PCAOB is updating their firm reporting inputs. Their firm reporting, which has a lot to do with inputs. I have opinions on that. This is for audit firms. And of course, that ties to what's going on with Macy's, because where were the auditors, David? That's one of those questions. And finally, I hope we can get to it. We have an update on the Experience, Learn, and Earn program from the AICPA. How is that doing? How is that pushing more accountants to become CPAs? We'll find out.
Because that's about
later.
3 years old now, that program. So it'll be interesting to see the status.
Yeah, we'll get an update. We'll see just how many new CPAs they are turning out from that. But before we get to the Macy's accounting error, the Macy's accounting mystery, let's thank our sponsors. David, who are our sponsors for this episode?
So we have Zoho Practice, SureLink, and Cloud Accountant Staffing.
Thank you to our sponsors, and welcome to more live stream viewers. Heather Smith says, hello from Melbourne at 5 a.m. here. My last conference of the year, Access All Areas, the first Access conference. They bought Fathom and changed GPS and Tradeify recently. What a treat to wake up to your pod. Great to have you with us bright and early, Heather. Tyler says, glad I could make it. Happy Thanksgiving, guys. And Quentin says, happy Thanksgiving from PA, guys. Happy Thanksgiving.
Funny email exchange I had with Heather this week. She sent me an email asking if we've attended the Microsoft conference. Microsoft has an AI conference. And I said, of course not. We're just accounting celebrities. And she said, but don't Microsoft realize the accountants are like the biggest users of Excel? And I was like, oh, that makes sense. But
that's right. I have a story about Microsoft working on like making AI agents or AI LLMs work better with Excel, but I just never got around to it. You know, maybe when they release that, we'll talk about it. But I do know that like Copilot is like the way that most accounting firms, especially larger ones, are interacting with AI right now. So, you know, hopefully we can get out there next year. That would be great. Maybe we should pitch their events people. But anyway, let's talk about this Macy's accounting mystery. So what happened here? I don't know if it was on Monday, maybe it was like on Friday. The news broke on Monday that Macy's included in their quarterly filing an investigation, an accounting error. An accounting error led them to delay their quarterly reporting. That's the big news, right? So Macy's could not put out its quarterly earnings because of this accounting error that they discovered, and you can actually see it in the regulatory filing here. If you go to the Macy's financial reporting page on their website, Investors Financial Reporting SEC Filings, you can open up the 10K. And it was filed on November 25th. So I guess that was yesterday.
Yesterday.
Right. So in that filing, if you scroll down to, it says page 2, but it's actually much further. It's under the section Other Corporate Developments. We have this very intriguing paragraph. The company also reported today that during the preparation of its unaudited condensed consolidated financial statements for the fiscal quarter ended November 2nd, 2024, it identified an issue related to delivery expenses in one of its accrual accounts. The company consequently initiated an independent investigation. As a result of the independent investigation and forensic analysis, the company identified that a single employee with responsibility for small package delivery expense accounting intentionally made erroneous accounting accrual entries. Erroneous accounting accrual entries, say that 10 times fast, to hide approximately 132 to 154 million of cumulative delivery expenses from the fourth quarter of 2021 through fiscal quarter ended November 2nd, 2024. So approximately 3 years. During this same time period, the company recognized approximately 4.36 billion of delivery expenses. There is no indication that the erroneous accounting accrual entries had any impact on the company's cash management activities or vendor payments. The individual who engaged in this conduct is no longer employed by the company. The investigation has not identified involvement by any other employee. And then they discuss that Macy's is delaying its earnings release and conference call related to the third quarter to allow for completion of the independent investigation. And they're going to they expect to release their results, their quarterly results on December 11th, or by December 11th, they said. And then there's a quote from the CEO. So like this triggered a lot of questions. And there's a lot that I don't quite understand about this,
Even
David.
the verbiage of this, because this is to some extent the official statement about this. And
Right.
it really focuses on a sole employee. They use the word hid, which is very odd.
Intentional.
Right? Intentional. No, and they're over and over again, nobody else was involved. We did an internal investigation. It almost, like, my first reaction listening to it now that you read it out like that is, are they kind of, don't look over here, we got it under control? like to avoid a bigger investigation?
Right. This is a little odd. I
Yeah.
agree. It's strange too that they announced that like the internal investigation determined that the employee acted alone, but also the internal investigation is ongoing. And it also feels like this was discovered very recently because their earnings were due like that day,
Yeah.
right?
How
And
long ago was the investigation? Right.
I don't know. It's unclear. And by the way, if you want to go check this out for yourself, you can look it up on the on Macy's Form 8K.
Do you want to paste
W-
that link in the chat?
yes, I will. Go for it. Have fun, everybody. Dig into that 8K. It's only 9 pages, so not too bad. Okay, so that was a lot of text. That was a lot of me reading from a financial report. I hope you're all still here with us. You're accountants, though, so you know I'm sure you can stick with me here. So let's just go through the facts again, right? A single employee, according to Macy's, intentionally concealed between 132 million and 154 million of delivery expenses. Like, I'm also a little curious why there's that range. Like, why don't they know exactly what the amount is? I guess that's because the investigation is ongoing, and that this employee did this for 3 years. And I am assuming that this was an employee in the accounting or finance team. And this is important. You might wonder, well, okay, what happened to the money? Macy's is saying that cash management was not impacted and that all vendors were paid. So if this was a fraud, it wasn't the employee stealing money. It's a true financial statement fraud. And we could actually do a little CPE, David. Would you like to learn how these debits and credits work? Like, where did the money go, right? That's the question.
Before we do that, can we even take it one level higher? Can we define what is small package delivery? Is this packages, I order a pair of shoes from Macy's and they ship it to me, and now that small package costs $3 to ship and they're going to pay that to UPS or somebody? Or what?
I didn't actually look it up, but I just assume that when they say that, they mean what you're talking about, like
Okay.
shipping a package via the United States Postal Service or FedEx or UPS. And so when Macy's does that, they are not providing the delivery service. They're using a vendor.
So you would credit
Macy's,
cash and you would debit delivery expense.
So, well, there's a few steps before that.
For that, okay.
So let's say Macy's gets the bill from FedEx. You debit prepaid delivery expense and you credit accounts payable. So it's an increase to accounts payable. You got to pay that money out, right? And it's an increase of prepaid delivery expense. And typically, you don't recognize these expenses right away. It doesn't go straight to the income statement. It goes to a balance sheet account, a prepaid expense account. And then later, at the end of the period, you're going to calculate just how much of that expense you need to recognize based on the packages that were shipped. Now, this is vastly simplified. I'm sure it could be extremely complicated with lots of entries in Macy's ERP system. But basically, this is how it works in school, right?
In a perfect world, you want that to line up. You want the fees you paid for shipping to line up with the packages you shipped and the inventory that went out, so you have nice accrual statements.
Yes, and it all ties to that fundamental principle of accounting, which we too often forget in GAAP, which is we need to match up the timing. The timing of revenue, the recognition of revenue should match up with the recognition of expense. So the revenue from those packages, from those orders that are shipped, should line up in the same time period with the delivery expense. And that way you can calculate the profit on these items or just on all of the sales, right? That is like a core task of accounting. And when it doesn't happen, it distorts profit because it might delay or accelerate expense or delay or accelerate revenue, and now there's no longer a match, right? The timing principle. I may not even be saying that right, but that's the idea. You all understand what I mean, right? So what happens is that was the bill gets received, right? So then the bill gets paid, and Macy's is saying all the bills got paid, the vendors got paid. So it wasn't like this employee was siphoning off funds and paying somebody else. That often happens, but they're saying that didn't happen in this case. So what's the entry when that happens? Well, you got to decrease that accounts payable, so that's a debit. And then you've got to decrease your cash, right? You paid out cash, so that's a credit to cash. So debit accounts payable, decrease, credit cash, decrease. Now, we are taking as a given that those things happen because that's what Macy said. Vendors got paid, cash management was not impacted. Where could things have gone wrong? And this is where the accrual entries come into play. So as the prepaid delivery expense is utilized over time, Macy's has to make adjusting entries periodically to recognize the expense on the income statement. You have to take it out of that balance sheet account bucket and move it over into expenses on the income statement. And so that entry is a debit, an increase to delivery expense. Maybe they have a separate account called small package delivery expense. Maybe they have lots of accounts. It all gets rolled up. And probably on the financial statements, I haven't looked at them. I don't even know if they've got to have like a separate line for delivery expense. I would hope that so that we could see that, right? But it's probably just like one line is what I'm guessing often. Maybe not that many. But anyway, in their system, they have this, right? They have a way to track it. So there's a debit to that expense account and a credit to the asset, to the prepaid account, and that decreases the prepaid. Now, if that is done incorrectly or not done or manipulated, then what you're going to have is an understated expense and an overstated prepaid asset. And this can compound over time if it's not done. So what happens is then all that stuff that should have gotten expensed on the income statement just accumulates and builds up into this asset that should not be there on the balance sheet, this prepaid asset. So that's basically what happened here in theory, according to the facts that I know, is that the expense was not being recognized for many, many quarters, something like 3 years. And that prepaid asset was just building up to where it got to be 130, 140, 150 million, something like that.
Like essentially the employee wasn't doing his job of making the adjusting entry on a regular basis?
Well, and this is what's weird is that Macy's is saying this employee intentionally did this. And that's where we get to the real mystery, which is the question, why would any accounting and finance employee do this alone? What is the motive? On the fraud triangle, you always have a motive. Maybe it's greed, maybe it's gambling debts, maybe it's, some reason that somebody wants to steal money, right? But here, I don't see a motive to intentionally do accrual adjusting entries wrong.
And I'm assuming that this role is not VP level role. I'm assuming at his role, it's not like a sales department, right? Or the marketing department who have revenue-based goals to get a bonus hit.
Right.
Like, where's the motivation? That hurts my head.
Exactly. That's how financial statement fraud usually happens. And that's how accountants get in trouble is there's pressure from management to make Wall Street's earnings, right, to beat the street. And so accountants get pressured to make these entries they shouldn't be making.
And we've seen this with Under Armour clothing. We've seen them with Archer Midland Daniels. They do all this stuff to hit their bonus, and they do crazy. They do this. It's common.
Lovesac.
Unfortunately,
Lovesac
it's common. Lovesac now too. Yeah, it's common. Unfortunately.
So, for the fraud for fraud to happen, usually there's three things present. I mentioned the fraud triangle, so I just want to cover this. So, the first is opportunity. That means you have to have some sort of weakness in your internal controls that allows the fraud to occur. It's clear that happened here because a single employee was able to make improper accrual entries for years and nobody caught it. That's an internal controls deficiency. There should be something in place to catch this. The second is pressure or incentive. That's also motive. Personal financial difficulties, addiction problems, fear of job loss. That could be one. We'll talk about that.
But we don't know anything about that because he's a mystery employee still. We don't know.
Right. Yeah. And then there's rationalization, which is like the person doing the crime rationalizes why they're doing it. And usually it's something like in finance, I'll pay it back later. I deserve it. I'm
I work so
underpaid.
hard.
I was mistreated, right? That sort of thing. So going back to the motive or the incentive, I don't understand why any accounting employee acting alone would cause a material misstatement in financial statements. What is the benefit to them? It's extremely risky. It's career ending. You could go to jail for it. So that doesn't quite add up. That is a mystery to me. And so if that is not true, maybe the employee was not acting alone. Maybe the employee was pressured. That's possible. We don't know. But I would be very curious to learn more about this internal investigation and how exactly they determined that the employee was in fact acting alone. If they did, maybe that's just what they're saying. We don't know. But as I'm thinking about this, I did think of one motive, which happens. It's not common, but it's possible that this employee didn't really know what they were doing, was just following last year and maybe made some mistakes, maybe did it wrong and didn't want to own up to it. And so just kept doing it the wrong way and covered it up and did not report it. That would be intentional, and that would be a fraud.
They realized they were doing something wrong, and so they're trying to fix it, but they didn't want anybody to find out they were wrong. Or maybe a good analogy is somebody who can't read, tends to pretend they can read.
There you go. Somebody who doesn't know their debits and credits, gets a job working at Macy's, is responsible for the small package delivery expense account, and makes the incorrect entries for a while, and then realizes what happened and decides to just cover it up as long as possible. And so that's a possibility. The other possibility is that they were simply incompetent, but then I don't understand why Macy's would call it intentional and throw them under the bus. So to me, the most likely explanation is that the employee didn't know, wasn't doing it properly and covered it up, and Macy's failed to detect it for a while. And so that would be the intentional part. But the conspiracy theory is that there's a reason that somebody in management at Macy's pressured this employee to do it. And the only reason I think that makes any sense at all is because Macy's has many years in which it swings back and forth in terms of net profit from a loss to gain. And some years they make $1 billion or more in profit. But some years they lose money, and some years it's very, very close. And in 2023, their net income, I believe their net income was $105 million, which is less than the amount of this misstatement. So think about that. If they had recognized this last year in 2023 fiscal year, they would have had a loss instead of a profit. They would have lost money. So that's the conspiracy theory.
I thought the conspiracy theory is this just they're saying that all these Fortune 500 companies now are infiltrated with Chinese spies. Is this a Chinese spy just messing around with the books just to wreak havoc and distract Americans with this story?
Well, now you're going you're going real conspiracy theory there, David. So
one thing I want to touch on, but I think we should run our next ad, is because there's not a lot of information about this. All the press reached out to a bunch of people in the accounting industry to get their 2 cents and their takes on this. And I have a couple of takes I want to review with you and give you my opinion of what's coming out of their mouths. But we should run our first ad. So let me jump in for that.
Let's do that. Thank you to Zoho Practice for sponsoring this episode. Go for it.
Do you want to read it or me?
Why don't you read it, and I'll put up the banner.
Perfect. Introducing Zoho Practice, the all-in-one practice management platform built to streamline accounting firm operations. Zoho Practice saves you time chasing clients by automating reminders and requests to get you the documents and clarifications you need when you need them. Staff and clients stay connected through a centralized communication hub to resolve accounting queries faster. Seamless timesheets and billing translate into billable hours into invoices with just a few clicks. And robust document management means no more digging through piles of paper to find what you need. Beyond workflow efficiency, Zoho Practice also enables real-time financial visibility across clients thanks to seamless integrations with Zoho's accounting tools, allowing you to gain actionable insights to identify and resolve reporting inconsistencies quickly. Whether you're ensuring tax compliance, monitoring cash flow health, or simplifying collaboration, Zoho Practice is the unified solution to manage all aspects of an accounting practice. To explore how Zoho Practice can save time, enhance oversight, and help your firm work smarter for free up to 5 users, head over to accountingpodcast.promo/Zoho. That is accountingpodcast.promo/ZOHO. Thank you, Zoho.
All right. Thank you, Zoho. And we have stimulated quite a lot of discussion in the comments. Some folks agreeing with it's probably just a new college grad who was doing it incorrectly. There's some conspiracy theories going on. Ralphie says maybe they could be trying to make the statements look better for some sort of bonus for a friend. Could it have been insider trading? It seems kind of a poor way to do that. Yeah, were they their pension had the stock shorted preparing for retirement? Laughing emoji. Quentin says it's an old adage, senior management pressures employees into overstating revenue and understating expenses in order to qualify for performance bonuses. That's usually the case. I would be like, I mean, this would be like really juicy if that is what actually happened here.
And if you go back to the statement, the CEO talked about, we have a culture of ethical behavior here. Like, you start reading between the lines, it feels like there's more to this story we're going to find out.
Well, because whenever anyone says we have a culture of ethical behavior, usually that's an indication of an ethical problem in the company.
Cultural problem.
Actually,
yes.
Yeah, we actually just talked about that on one of our episodes, that the more a company talks about how ethical it is, often it's less
ethical.
That is a sign that there are ethical issues, right? So, yeah, that's fascinating. Jenny says, was there someone reviewing their work? If there was, then the review didn't accomplish its goal, did it?
You mean the auditors?
Well, and I'm glad you brought that up, David, because that's always the question here is, where were the auditors? Where were the external auditors? And Byron on LinkedIn, Byron Patrick brought up a good point, which is that this is a very small amount compared to the overall delivery expense, something like 3 to 4% of overall delivery expense. This misstatement that built up, this improper accrual. So in that respect, well, yeah, that's not particularly material. Often, like there's no hard and fast definition of what's material, but less than 5%. 5% is often a benchmark in certain categories.
In comparison to gross margin over the 3 years, the cumulative gross margin, it's only a 20 basis point, so 0.2%.
Right.
That's how immaterial it is. It's very, very teeny.
But it depends what you look at. Are you looking at net income? Are you looking at the bottom line?
So this was cumulative gross margin.
Right. Yeah. So gross margin, though, like that's just after cost of goods sold, right? Yeah. So that doesn't include any of their like operating expenses, which, in many years, Macy's has had a loss of billions of dollars, or they've just broken even, right? So like this, even though this was a small account, this amount is more than their net profit last year in 2023. So it
doesn't pass the smell test for Main Street America. You can't tell people $150 million is immaterial. It's very hard for people to comprehend this.
Right.
Like $38 is immaterial, but $150 million is a lot of money to just write off as immaterial. And
and that's because these are giant, businesses, and we use percentages. We don't typically external auditors use percentages. Because we can't just use like fixed numbers when it comes to materiality, because it would just be too much work. So I think a common, it's different for every account. It can be. And here's the thing that's really fascinating about this. We don't know what the auditor's materiality standard was. We don't know what number they chose, what percentage they chose, because external auditors in the United States are not required to disclose this information to anyone but the Public Company Accounting Oversight Board, the PCAOB, the auditor of the auditors, and that only happens when the PCAOB selects a particular audit for inspection. And then the PCAOB gets to know what the materiality was, but the public never finds out.
It's not in
the only way that we find out is if the PCAOB determines that there was a Part 1A deficiency or something like that related to perhaps materiality.
So this is in all these people, I'm going to use air quotes here, in our industry, experts, whatever, all got interviewed and just got a little quote here, including you, Blake. I think you got quoted in the New York Times, correct?
That's a first for me. It was really fun talking to the New York Times about this. And
I was happy because your comments didn't make accountants look stupid. And a lot of other people's are. We can, I can summarize it like this.
Okay.
This is the reason companies hate financials that are accrual. Auditors hate accrual financials because they can play games with the numbers. This is very difficult for enterprise software to track and ERPs to track. ERPs can't detect this. Audits can't detect this. It's immaterial. Over and over again, all these comments about this make the public think accountants are morons. They really do.
Right. Well,
how is it insignificant, or you can't track $150 million? Everybody looks like a fool. Everybody looks like a fool because of this.
Yeah, and that's why I didn't focus on that in my response, because as a CPA, because it really frustrates me when the response to where were the auditors is, well, it's not the job of auditors to find fraud. Because I think it should be. If fraud is material, then auditors should be finding it and detecting it. And a very, very tiny percentage of frauds are actually detected by the external auditors. It's like a few percentage points, and it's way less than the percentage of frauds that are detected by tipsters and internally and external people that are not auditors. So, yeah, I mean, to me, every time something like this happens, it is diminishing the respect that the public has for auditors in the certified public accountant license and everything that we stand for. Because what do we say all the time that our job is as CPAs? It's to protect the public. That is why the word public is in certified public accountant. And we are failing to do that job because we are not detecting fraud. And people lost money on this. Macy stock dropped like 8% in pre-trading after this came out, and then like another 3.5% midday. Like that's a lot. And they could detect it if they had better methods. I believe that. Like the methods that auditors are using to audit financial statements really haven't changed that much in decades and decades. And it's all based on like manual sampling of transactions. And so that's why we set these like really high, relatively high materiality thresholds where like, nothing, like that's why this thing went undetected. That's my theory why this went undetected is that like the account, this shipping account was relatively small in the context of shipping and even in the terms of revenue, maybe not for net income for 2023, but for 2021 and 22, it was. So like the auditors probably never even looked at this account. And the auditors do look at internal controls, but it's pretty common where if the company that they're auditing doesn't make the fixes to the internal controls, it's not like the auditors come back and say, well, we can't audit you next year. They do it anyway. And, KPMG has been auditing Macy's since like 1988, right? So maybe they passed their internal controls audit, but clearly the internal controls aren't working. So there's something wrong with how these audits are being conducted. If the internal controls are working and the internal controls pass audit inspection, then we should expect this to be prevented. But it wasn't. So maybe it just means like the internal controls are written down somewhere, but nobody's actually following them. That could happen. Do the auditors actually go in and look to make sure that internal controls are being followed, or are they just looking at documentation that nobody actually uses? And management override of internal controls happens all the time, and internal controls are pretty much useless if management isn't following them. So I do think it is our responsibility, and we should step up and we should figure this out. And it's sad to me that like the CPA profession, the accounting profession, isn't willing to take that on, you know, and that's why salaries have stagnated, because if you don't create value to your customer, you can't capture value in the form of compensation and salaries. So like, unless we create more value, unless we do more for our customers, and in that case, when it comes to public companies, it's the investors, it's the public, then, you know, people aren't going to value it. Audit committees aren't going to value it. They're not going to pay us to do our job, right?
So
they'll pay us the minimum.
So you have an expense tracking story, correct? Fraud, expense fraud?
I do.
Right,
I just
I'll
want to
do our
make sure
second ad while you queue it up then. I'll give you a chance.
Okay, cool. Go for it.
So our second sponsor is SureLink. Juggling dozens of client documents, signatures, and file requests can feel like an endless maze. If you've ever wished for a better way to manage all of this, you'll want to hear about SureLink. SureLink is a document management system built specifically for accounting professionals. Imagine having all your client requests in one dynamic list, updated in real time and accessible by everyone on your team. No more hunting through email threads or wondering if you have the latest version of a document. What makes SureLink special is its ability to automate your most time-consuming tasks. With customizable templates for recurring work, built-in e-signatures, and real-time tracking of every document's status, you'll wonder how you ever managed without it. Plus, your clients don't need any special software. They just drag and drop their files, and with a clear audit trail of every action, you maintain complete transparency and peace of mind. Whether it's a massive QuickBooks backup file or an obscure compressed file, SureLink handles any file size or type, no limitations and no headaches. Here's what's really impressive. Firms using SureLink report cutting their document gathering time by 50%. That's time you can spend actually serving your clients. So if you're ready to simplify your document management and focus on what you do best, providing top-notch accounting services, head over to accountingpodcast.promo/SureLink. That is accountingpodcast.promo/SureLink. Thank you, SureLink.
All right. I'm trying to think if there's anything else I want to cover about this Macy's thing, but go for it.
I only had a small side note. So because of this story had so much traction, UPS actually benefited from this because UPS on Friday agreed to pay $45 million fine to the SEC for their accounting issues. They were accused of improperly valuing its freight business, leading to misrepresented financial results in 2019 and 2020. So even though that might be a $500 million discrepancy that's happened and they got this huge fine, nobody saw it. Nobody saw it because the Macy's news is just dominating. So nobody noticed that UPS actually had a worse issue. Possibly.
That's funny. And UPS was probably the vendor getting paid most.
Yeah, they might be connected stories.
Small business delivery expense. All right. Okay, so we were going to talk about expense fraud, right?
Yes.
So this is kind of related, and it's kind of a mind-blowing statistic, which is that, and the headline's great. This was in the Wall Street Journal last week. Strippers, Christmas gifts, and an RV. Workers push it with company cards. So according to the Association of Certified Fraud Examiners, expense fraud is on the rise, and it costs businesses an estimated, get this, 5% of revenue on average.
That's immaterial.
Well, we don't know, David, because auditors don't have to disclose their materiality thresholds. Maybe they should. Maybe that's the takeaway from this is, like, I would be very curious to know what materiality does KPMG use to audit Macy's, and how do they do it? Like, why can't investors know that? It's probably all, it should be all clearly documented in the work papers. Let us know. Maybe SEC could come up with some sort of standard, and it has to get reported in the financial statements. I don't know. Let's figure it out.
So 5% of all. fraud, or 5% of revenue is expense reporting fraud.
Yeah, 5% of revenue is lost due to expense fraud. Now, what is expense fraud? Well, here are some examples of expense abuse. Personal expenses on company cards. Employees have charged personal items like family Christmas gifts, romantic getaways, and even attempted large purchases like an RV, all on the company dime. And there's like some really great illustrations in this article. Some employees also misclassify or alter expenses. They might disguise personal expenses as business costs. A great example in the article was a guy who figured out that a strip club was showing up on like the Visa network as like a restaurant. And so he could use his company card there and it would not get flagged in whatever expense reporting system they're using because it was classified as a restaurant.
Yeah, the merchant code.
Yeah. People manipulate receipts to increase costs so that they get, pocket the difference. And abusing home office allowances was pretty common. During the pandemic, people would funnel home office stipends into unrelated home improvements or personal expenses like daily coffee runs, even seeking mileage reimbursements for working at home. And cited in this article actually is a story that we talked about in the past, which is the Jacksonville Jaguars financial manager, Amit Patel. So he managed to steal $22 million from the NFL team, the Jacksonville Jaguars, by skimming money from expense fraud. He would inflate hotel, airfare, catering, and other expenses, and he did it for 3 years. And I have a follow-up to this, which is that now he's suing FanDuel, the sports betting site, claiming that FanDuel got him addicted to gambling, which is what led to him stealing the money from the Jaguars.
So the owner is suing FanDuel.
Well, the financial manager who stole $22 million is suing FanDuel.
Oh, he's suing FanDuel for being addicted.
Because his gambling addiction caused him to steal money. Right. So I think every accountant who has dealt with expense reports has seen this sort of thing, either small or large. And it happens a lot. And that stat from the fraud examiners, the Association of Certified Fraud Examiners, is staggering because 5% of revenue is how much of net income? Just imagine if your company is losing 5% of revenue to expense fraud and you were able to stop it, what would that do to your profit? A lot of companies are making, some businesses like Macy's, it could be a few tiny little fraction of
retail and grocery stores, tight margins.
Very small, right? That's like a huge impact. And, even if you're in a very profitable business, like say an accounting firm where you get, 20% EBITDA in many cases, then like 5% more, like, hey, that's significant. Let's say your net is 10%, your net income's 10%, add 5% to that, right?
I mean, that's employee bonuses for everybody on your team. It starts adding up.
Yeah. So this ties back to the story we were talking about with Macy's, is like, how do we stop this? And technology is the answer. And I really believe that this is going to be one of the primary benefits of integrating artificial intelligence into accounting systems and ERP systems, is that human auditors, both internal and external, are extremely time constrained. And I don't blame them for not checking every single account.
So they just take samplings.
Journal entry. Right.
Humans take samplings.
Right. And even before you sample, you got to set a floor on what you're looking at. So the dollar amounts can be enormous. And fraudsters are smart. They figure out very quickly, the auditors never look at anything less than $10,000. So all I have to do is limit my fraud to less than that, and I'm going to avoid scrutiny. It's not that hard to trick the auditors, especially when they're like 22 years old and they've never generated a financial statement in their life and they're fresh out of school and they don't know anything. All they know is accounting theory. So like tricking them is not hard. But AI can be programmed to look through every single transaction in a general ledger and spot the inconsistencies. So if an AI were trained on reviewing journal entries, you could replace the human who should have been reviewing the employee's accrual entries in that account with an AI doing it, at least as a first line defense. And I bet you that if you gave an AI a bunch of journal entries, like real journal entries as examples, hundreds or thousands of them, and then you gave that AI like an analysis that was performed by a human explaining if this entry is correct or incorrect, like case studies, essentially. If you provide an AI with enough examples of proper and improper accrual entries, and then you set it loose on a GL and had it go through all the JEs, the AGEs, it would do great. And it would probably do better than 90%. And I'm basing that on the story last week we talked about, the doctors and the diagnostics.
Diagnosis. Yeah.
Right. So we talked last week about how AI beat medical doctors at diagnosing diseases. And it got 90% right on real case studies that it had not been trained on. And this is just the current GPT-4 you can get from OpenAI. I mean, actually, not even the latest one. It's not even 4.0. It's just GPT-4. Got 90%, and the human doctors got 74%. Why is that? Because humans have a very limited scope of experience, and an AI can have vast knowledge.
So
that's how it works.
So compare them side by side. Okay, so humans cannot look at every transaction. It's impossible. Human auditor.
Right.
So they have to take a sampling. And when you take a sampling, there's a chance you're going to miss some. Whatever percentage chance that is, you're going to miss some. On the other hand, AI can look at all the transactions. That might hallucinate and, create some extra things, maybe false positives or whatever.
Right.
But so that's the real study that has to happen. All you accounting professors that have your research departments, you have to publish. Those are the two comparisons because which one's worse? The hallucinations that might happen or all the stuff being missed by the manual auditing efforts, the sampling?
Well, I'm gonna say that it's okay if you have a little bit of error in the AI because it's still more accurate than a human. And you see that with self-driving cars, right? Self-driving cars in Phoenix and San Francisco, the Waymos that are all over the place here now have driven 25 million miles, and they're something like 76% safer than human drivers. So they don't have to be perfect, and they can save tens of thousands of lives because something like 30,000 people a year die in car accidents caused by human drivers. So it's not about perfection. And in the case of auditing, where the bar has dropped so low because of the talent shortage, because of the overregulation of the industry, because people don't have enough time, because of the flawed business model of audit firms, we could significantly improve the quality of external audits and internal audits just by employing AI auditors on the GL.
Actually auditing every transaction.
Yeah. And there have been lots of questions going on in the chat. Like David H is saying, where was the journal entry approval for this Macy's employee's entries? Should have a separate approver for their entry. Yeah. And I'm sure that, as David H says, most SOX control environments have a segregation of duties for entries. But guess what, David? If that's written down, but it's not followed, then it's meaningless. So unless the auditors are actually making sure that the internal controls are being followed, it doesn't matter if they do a SOX report. It's irrelevant because what matters is what's actually happening in reality. And if management overrides those internal controls by giving an employee the ability in the accounting system to approve their own JEs, or maybe somebody is not actually reviewing and is just hitting approve, then it doesn't matter if you have those internal controls. So rather than focusing on the internal controls, maybe we should just be focusing on the outputs, auditing the quality of these entries, actually sampling them all. We can sample with AI, we can sample 100% of the adjusting entries. And I guarantee you that it'll do a better job than human reviewers, because what's more boring than just reviewing journal entry after journal entry after journal entry all day long?
Yeah,
people are going
eventually
to do
you can't even see it in front of you. Like your brain, like your eyes, yeah, you can't process it.
In these companies, I bet you that the reviewers are just signing off without looking, because that's all that matters to the auditor, is that there was a date and a timestamp of somebody who reviewed this entry, not that the entry was actually correct.
Yeah, just get it out the door.
Right. So that's the potential for technology, and I really hope that it can raise up the profession and make audits higher quality and detect fraud. And it's a big opportunity for audit firms that actually want to do high quality audits. We keep talking about how we want to do higher quality audits and improve the value of what we're delivering. Well, here you go. That's the way to do it. All right. So we're definitely not going to make it to all of our stories this week.
Well, let me do the ad, and then let's at least cover the tariffs, because it's very timely. And I don't think it'll take that long to cover. So let me do our third ad. And then
Are you going to start with the tariffs? Because if so, then I'll read the third ad and I'll let you.
Okay, yeah, and I'll get the tariffs open.
Okay. Thank you to Cloud Accountant Staffing for sponsoring this episode. In case you missed the last 100 or so episodes, David and I have been discussing almost weekly that there's an accountant labor shortage. Regardless of the root cause, the problem is real. You all feel it. My social media feeds are full of firms attempting to fill open positions on their teams, but how can anyone increase their staff size if everyone is attempting to hire during a labor shortage? That's where Cloud Accountant Staffing comes in. They will help you hire a full-time team member for your firm that resides in the Philippines. How much would your firm change, or for that matter, your life, if you could add 40, 80, or 120 hours of capacity to your firm in 2025? Cloud Accountant Staffing was founded by a firm owner who grew his firm using offshore talent, and now he is applying everything he learned to help you grow your firm. If your firm is in need of expert bookkeepers, accountants, CPAs, or virtual assistants, head over to accountingpodcast.promo/CAS. That is accountingpodcast.promo/CAS. And now, let's talk about the really scary thing. The Trump tariffs. This is what worries me.
And I don't know, on Truth Social, I'm just going to say Trump tweeted on Truth Social. I don't know what you actually do when you do on
Truth Social.
But is it a tweet? It's not really a tweet, but
it's a post. I guess.
Post. Okay, it's a post on Truth Social.
Was it a truthism?
A truthism. So on day one in office, a 25% tariffs on all products from Mexico and Canada, and an extra 10% tariff on China, because the extra 10% on China is because they didn't uphold their promises of stopping drug traffickers. So that makes China 60% plus 10% more, and the rest of the world's goods 20%. Now, what happened was right away, the Canadian dollar is now at a 4-year low. The Mexican peso is the weakest since 2022. The China's yuan edged lower. So the value of the U.S. dollar is increasing. Going back to what we talked about last week, which is the opposite of Bitcoin, right? Like, do you bet on Trump, who really wants the U.S. to be to number one and the U.S. dollar to be number one? That's the opposite of Bitcoin. But what's happening now, Blake, is you're seeing companies start making statements about these tariffs. So Walmart, Lowe's, AutoZone, Dollar Tree, they're basically saying they're going to raise prices. Walmart, this is the Walmart CFO, recently said that if President-elect, in regards to the tariffs, we never want to raise prices. Our model is everyday low prices, but there probably will be cases where prices will go up for consumers. Lowell's CEO expressed concern, saying they're talking to suppliers to understand how the tariffs might affect prices. AutoZone CEO, they said they plan to hike prices even before the tariffs go into effect. And Dollar Tree, I didn't know this, was already like $1.25 tree. Apparently it's not Dollar Tree anymore, but they're going to have to go up to become $1.50 tree. But so I went on a little research because I was wondering, how is this going to affect outsourced labor? And so tariffs aren't directly on outsourced labor because a lot of accounting firms use lots of outsourced labor.
Right.
But as the dollar goes up, that means the outsourced labor is going to be cheaper. So this is actually good for accounting firms using outsourced labor. The labor will be cheaper. And then if some of these countries that are manufacturing take economic hits because of this, now there's a surplus of labor, also causing even more outsourced labor to be cheaper. And the tariffs don't do this. So in a weird way, this could actually benefit accounting firms. Accounting firm profits could be up because of these tariffs. which would be good because you're going to
Interesting.
need it to go shopping at Walmart.
Yeah, I mean, this is the thing that really concerns me is that like if the goal of the Trump administration is to bring down inflation, this is a surefire way to do the opposite because the cost of tariffs has been proven time and time again to be borne by the importer, us, not China, not Mexico, not Canada. It's US consumers who pay the tariff in the form of higher prices. It gets passed on to the consumer. And sure, yeah, maybe a tiny amount gets absorbed by the manufacturer and maybe a tiny amount gets absorbed by the importer, but most of the time their margins are already pretty thin. And so it has to get passed on to the consumer. So yeah, 25% tariff and
Oh,
an additional 10% on China, would that make it 35%? You know, that would be like a huge increase in the price of everything imported from China that's at Walmart, which is a lot of stuff.
apparently it's a third of the stuff. They said 2/3 is
Okay.
still is made in the U.S. But I can
Well,
already see
that's good,
2025. We're
actually.
going to have a no guacamole, no avocado policy at restaurants. I can already see it.
Well,
This
you get the surcharge
when
everywhere, right? The
Chipotle wants to
Chipotle policy.
yeah, they want the guacamole. I'm like, no way, it's too expensive for those avocados from Mexico, and it's
Yeah,
you can't even hoard that. You can't hoard the avocados because they don't last. You're
right.
going to have to pay the 20% extra tariff.
So, I mean, the hope here that I've read is online, like the hopeful view is that this is simply a negotiating tactic and that Trump is using the threat of tariffs as leverage to get what he wants when it comes to Mexico and Canada helping to stem the flow of illegal immigration, get them to do it rather than us doing it, and get China and Mexico, I don't know if any of it comes from Canada, to stem the flow of illegal drugs across the border. But my thinking is that there's only so much that these countries can actually do because we have a demand problem in the United States. And this is always the case with black markets is that unless you can do something about the demand, it's very difficult to stop the flow of illegal goods and immigration because people will find a way through all the holes in all the gaps in the wall, both literal and figurative. And like fentanyl, how is China supposed to stop the flow of fentanyl when fentanyl is so potent that like in a tiny package you can ship enough fentanyl to the United States to make like I don't know thousands and thousands of pills? Maybe it's insane. So you can't just deal with it on the like supply side. You got to deal with it on the demand side. That's my take on this. So, I don't know if Trump's going to get what he wants. So, and this could be like very bad for the economy. And I guess it's something that like what's the CPA perspective here if you're dealing with your small business clients is I mean this doesn't look good. Do your best to get away from supply chains that involve these countries. But that's really hard to do because it takes years and years to rebuild supply chains, and there may not be another source for the good you need. And this is why the swamp could end up getting bigger in Washington. So remember in the last Trump presidency, there were stories about how people would, set up shop in the Trump hotel and work on getting exclusions to these tariffs.
Yeah.
The last tariffs, right? So even though like in the first term, Trump imposed tariffs, but then allowed companies to lobby for exemptions. And many, many, many companies applied for tariff exemptions. There were over 50,000 requests to the U.S. Trade Representative and nearly 500,000 to the Commerce Department. And it prompted a huge surge in lobbying efforts, with law firms filing hundreds of thousands of exemption requests on behalf of companies. And studies have found that exemptions were more likely to be granted to companies contributing to Republicans, while those supporting Democrats were less successful. That is the definition of a political swamp. When you donate money and you get a like advantage over your rivals. Like we do not want this sort of system where people are lobbying for exemptions to get like a a huge advantage in terms of their cost structure over their rivals. And it was very inconsistent, and there was lack of transparency in how this was done. And we're seeing this happen again. Companies are engaging lawyers and lobbyists preemptively to navigate and get exemptions to these tariffs. And the tariffs are even bigger, so the stakes are even higher here. And this is what
how
sucks
these
for
crazy
small.
like import rules start coming in when it comes to like Halloween costumes. And well, if it doesn't have a beard, then you bypass the whole tariff. And if it has a beard, like all these crazy laws come into play because of this negotiation, right?
Right. And workarounds and loopholes. And the problem for small businesses, and this is the challenge for us as accountants advising small businesses, is that they do not have the lobbyists and the lawyers to get these exemptions. So it puts small businesses at a potentially huge disadvantage versus the established players that can get it. And it also is a waste of energy because companies are focusing now on securing exemptions rather than improving productivity, creating jobs, and lowering costs. So tariffs are taxes. I think that is what we need to do as a profession, is we need to educate the public that tariffs are taxes. So when Trump says, I'm going to put in place a 25% tariff, it's not a punishment on China, it's a tax on Americans and American businesses.
Tariffs are taxes. That's the new shirt. That's your
Tariffs are
2025
taxes.
slogan. You put that on your LinkedIn profile.
And look, I know many of our listeners are supporters of the Trump administration, and I support many of the policies and prospective policies of the Trump administration. We were talking last episode about like the Department of Governmental Efficiency, and like I think that would be a great thing. We could probably cut a ton of bloat, and I love that idea. But this one just does not make sense to me. And the business community and the accounting profession have to do something to mitigate this risk, because this is the sort of thing that could like trigger a recession. Or, like as we saw with the tax foundation analysis, could reduce economic growth. GDP could go down like 1.5% or more in a single year, cumulatively over many years. Like that's a lot over time. That
And people at
reduction
the
in
bottom get
growth.
hurt the most in a situation like that.
And actually, when you consider that, like, I don't know, what do we have, 2 to 3% GDP over the last year? Like most of that was caused by government spending. So if you strip out the government spending, the actual economic growth was less than the impact of these tariffs. So we would actually have net negative private sector economic growth if these, well, I don't know what the analysis would be of the 25%, because I think they analyzed like 60% on China and 10% on other countries. So they'll have to do a reanalysis, but it could wipe out the private sector gains. That's my concern.
So on that depressing note, should we get into our Thanksgiving weekend?
Get into our Thanksgiving weekend. Yes, thank you to everyone who joined us today. I hope that you are getting some time off this Thanksgiving, and if not, don't worry. I'll be working with you tomorrow. I like getting things taken care of on Thanksgiving week. It's nice. I don't travel anywhere, so it's easy. If you are traveling, my condolences, my sympathies. I'm looking forward to the parade. What do you think the balloon would be that represents this accounting mystery? Would it be like Scooby-Doo with a green accounting visor?
It could be that.
Can we make that the show artwork for this episode?
I mean, it could like be the turkey being stuffed. Actually, is there a like Inspector Gadget or something? Maybe, I don't know. Is that a balloon at the Macy's Day Parade?
Inspector Gadget?
Yeah.
I don't
Pink
know.
Panther. The Pink Panther was always kind of like in that Inspector.
The mystery. Thank you, everyone who joined us for this episode. Happy Thanksgiving. If you want to earn free CPE, go to earmark.app and sign up, create your free account. You can earn 1 free continuing professional education credit per week. These are NASBA CPE credits, so use them for your license renewal coming up. And if you want to support us, subscribe to the Earmark app, but you don't have to do that. You can use it right now today for free to get a free CPE for having listened. Go to earmark.app and find the accounting podcast. The courses come out a few days after the episodes drop on the podcast feed. So if you don't see it right now, just come back later and you'll get it. But you can get CPE for all of our past episodes as well. Happy Thanksgiving to AJ and Kamang and Ralphie. No Pants says, I thought Trump was trying to devalue the dollar. Yeah, like this goes to those counter, like you can't do everything you want because it's not all going to line up, right?
Yes.
And that's all we got. Thanks, everyone. See you around here after Thanksgiving. Bye.
Bye.